Okay, great. Welcome everybody to HKGFA's networking event and panel discussion on what's next for Hong Kong's carbon market. We're very honored to have with us today industry experts who will share their perspectives on the latest carbon market developments and opportunities that they will see in the pipeline. My name is Jenny Lee. I'm the Undersecretary General for HKGFA. And before we start, just a couple of housekeeping. This panel discussion will be for 1 hour, and there'll be 10 minutes for Q&A at the end. And for those online, please do register your questions in the Q&A chat box, and then we will pick those questions up and then hopefully answer them for you. For those in the audience, please just raise your hand at the time and a mic will be passed to you. If you do need to claim SFC CPT hours, don't forget to register your name in and out at the front desk. And also at the end, there'll be a survey for you to complete to then be able to claim the hours from your employers. And so, without much further ado, I'm going to pass the floor to Tracy for opening remarks. Thank you.
Hello, everyone. Happy 2023. Not a welcome remark as such. So we're expecting Dr. Ma to be here, but he's tied up on a meeting, but he will be here shortly. So we're going to switch him over. We're going to kick off the panel first, and then we will come back to having Dr. Ma on here to share his remark on the carbon market and for HKGFA to kick off the year. It's great to see many familiar faces on the floor, and thank you for the one joining us online. With that, let me pass on to our moderator for the panel today, our very own advisory to the chairman, Ben McQuhae, and also the award-winning firm, ESG-only firm in the world to kick off the panel. Thank you, Ben, please.
Thank you. Thank you, Tracy. Lovely to see everyone so early on in the year. So let me sort of start actually just by welcoming my fellow panelists and speakers to the stage. We've got three speakers today actually representing three very different sort of areas from within the carbon markets sort of spectrum. So we're very lucky to have first on stage, Mr. Edward Lau, Chief Financial Officer of New World Development. Edward, please join us. Next to Edward and representing the regulators, I'm very happy to welcome Elaine Ng. Elaine is the Associate Director, International Affairs and Sustainable Finance at Hong Kong's SFC. Welcome, Elaine. And last but never least, representing the financial institutions, our very own Tracy Wong Harris. Tracy is Managing Director, Head of Sustainable Finance Asia at Standard Chartered, and Vice President and Deputy Secretary General of the Hong Kong Green Finance Association. So with the band back together, a very happy new year to all of you. It's quite, I mean, we're kicking off the new year. We're not even through the first week yet, and here we are with our first Hong Kong Green Finance Association seminar, which happens to be on sort of mine and probably most of yours favorite topic at the moment, carbon markets. So the focus of this session is on really what's next for Hong Kong. The first part of the session, I really want us to just sort of take a little, maybe half a step backwards, just to reflect on a little bit of the bigger picture, because as most people here, and I'm assuming there's a pretty high level of sort of understanding and experience within carbon markets in this room, carbon markets has become such a hot and widely discussed topic in recent months and over the last year or so, so much so that most observers could be forgiven for assuming that the carbon market is already a well-defined or at least commonly understood concept, or indeed that there's consensus amongst practitioners about what we need in place to claim that we have a functioning carbon market. Whereas in fact, carbon markets are highly jurisdiction specific. They can mean, or the phrase can mean different things to different participants according to individual corporate priorities and regulatory frameworks. So let's turn the spotlight and all the attention onto Tracy to do all the hard work, which is good. Tracy, what does a robust carbon market look like?
Thank you, Ben, and hello again, everyone. So I actually want to take a step back on, instead of going directly, what does a robust carbon market look like? Let's debug a little bit. What is it for, and what is it? Okay. So first of all, why? So almost all nations signed the Paris Agreement to reduce GHG emissions to limit temperature rise to 1.5 degrees. This means we need to reduce carbon emissions from over 50 billion tons to zero. And to keep on track to the 2050 target, we need to reduce 23 billion tons by 2030. So to achieve this super ambitious goal, we need to substantially scale up both policy and market mechanism that can incentivize decarbonizations and emission reductions. And this is where carbon market comes from. So a well-functioned, high-integrity, robust carbon market is a key enabler to provide an effective, flexible, and economically efficient mechanism to accelerate to zero. Now, there are two types of carbon market, which people talk about carbon market is always interchanged. So I always have to check with them which one. So there are two types: the compliance market and also the voluntary carbon market. Now, the compliance market include cap and trade, carbon tax, and some credit scheme, etc., which involve carbon allowance tied to emissions under some sort of regulatory framework. Now, most compliance markets use cap and trade approach, and like the EU ETS, the emission trading system, and China, close to home, both the regional and national ETS are compliance market. And how does it work? This is where an emission cap is being set by the policymaker, and the emitters can trade, buy and sell their allowance within the cap. And this allowed a fair carbon price to emerge while ensuring the emission to reduce. Now, on the other side, voluntary carbon market is project-based approach, where a project is put out to reduce carbon emission beyond their BAU or baseline, and they can generate carbon credits where to sell to emitters for those that cost reducing emissions is higher, the carbon emission is higher. So the key to ensure this, the net emissions get reduced, and the project credits are additional to without the project, so beyond that BAU. And the overall goal is to really to reduce the emissions overall. Now, coming back to answer your questions on what does a robust carbon market looks like. So it needs standard to ensure high quality credit. So people need to know what they're buying for and what are the additionality. And for a market, we need liquidity, we need fungibility, and also a well-supervised market that to make sure that integrity and is well-functioned. So with that, let me pass it back to you.
Okay. So let me try and sort of summarize that. So a robust carbon market will include either or both a voluntary component and a mandatory compliance component. The voluntary component may or may not be regulated, but certainly doesn't need to be. The compliance component, by definition, is a regulated market. And the common themes that pervade through the carbon market, both in all sides of the carbon market, are things like quality, integrity, transparency, the need for price discovery, interoperability, etc. We should probably just doff our caps to Article 6 at this point as well. Article 6, people may be aware of the Paris Agreement, which is a potentially separate carbon market that sort of operates at the national level. At the moment, I don't think we're quite sure whether the Article 6 regime will complement the voluntary market not the voluntary market that we have, the voluntary market that we want and that we're trying to develop, or whether they're actually going to conflict and compete. So watch that space. Okay, so with that, let me move on, if I may, to Elaine. Elaine, from the perspective of, I don't know, regulators and perhaps policymakers, if I can really put the spotlight on you, why are carbon markets important?
Thank you, Ben. And thank you, Tracy, for the 101 on carbon. That saves me a lot of time in explaining all of the concepts. I just wanted to clarify my position first. So I work at the SFC, but I'm not in the regulatory or the operational arm of the SFC. So I don't actually, I'm not there. I don't do the actual regulation. We at my team, what we do is more at the regulatory development angle. So more strategic, and that's why sustainable finance is a key component of our work, because it is very much in the developmental stage. And I just wanted to maybe go into a little bit finer details around regulations. When we talk about the compliance market and that it is regulated, actually very often it's not the financial regulator who's regulating the market, is the environmental regulators. In China, for example, CSRC doesn't get involved, the exchange doesn't get involved. And when we talk about the voluntary carbon markets, then in this aspect, in this area, in fact, I don't think there are any jurisdictions out there that have actually claimed complete supervision of the voluntary carbon markets. The CFTC has looked into it, definitions of carbon credits could be commodities and therefore come under their jurisdictions, their oversight. But right now, there is still a lot of thinking around what needs to be done by the regulators in the VCM. And then if we think about why regulators are getting involved, then we need to kind of flip to the other side and look at the actual outcomes, the intended outcomes of voluntary carbon markets. And I want to be just to make it a little bit easier to digest, we just split it into two. Basically, we need actual carbon reduction, aggregate carbon reduction. So first of all, they will include companies reducing their emissions as part of business operations. There needs to be, there will be sectors that are hard activities, business activities that are hard to abate. So up to a certain point, you cannot reduce emissions anymore. I mean, it's like you cannot stop the cows from farting. So methane will continue to be produced. Let's just put it that way, okay?
I'm looking forward to seeing the headlines from this session tomorrow, by the way. SFC, it's official.
This is definitely the first example that I heard. Good one.
That could be the top of your regulatory priority hit list.
Then we cannot stop the cows. Yeah, I mean, there's a lot of other examples of why we cannot, there's certain operational activities just cannot be abated. See, I'm distracted now. I can't really remember.
That's okay. I mean, let me just give you a sort of a feeder question, because I think it was in Q4 last year, it could have been Q3, I don't recall. SFC put out its almost like a sort of, I think it was an update report on sustainable finance, where there was a page or a section of that report that clearly sort of held the door open for SFC to potentially regulate very specifically the voluntary market in Hong Kong. And then more recently, we had IOSCO, the sort of International Association of Securities Commissions, I guess, open their 90-day consultation period, which I think we're currently still in, about just to take views from practitioners about, whether securities regulators should be regulating, and for their consultation, it's both the compliance market and the voluntary market. And so, with that as a sort of framework, and to help you gather your thoughts, what sort of regulations how can regulation from a securities regulator help the development very specifically of the voluntary carbon market?
All right, thank you. Yeah, thank you for bringing us back to stage. So if you think about what drives real world outcomes, I mean, we want the voluntary carbon markets to deliver outcomes that are, actually impactful, right? So quality of the carbon credits, is hugely important. It underscores everything. So there is a lot of work in the private sector that's already happening on this, around standards creation. ICVCM is doing a lot of work. Exchanges are stepping up. So that is one thing. Then there is the other thing around how do you then generate, pricing for each credit. Each credit is different. Many of the carbon credits are different from one another. A lot of them are bespoke because projects are very unique to each other, depending on location, type of project, whether it's nature-based or technology. So there's so many variations around it. But ultimately, in order for there to be activity, for liquidity, for better participation in the market, there has to be a standardized contract. And in order for that to also then happen, regulators, I think, need to step up to think about whether or not in the secondary trading of carbon credits, there needs to exist, a marketplace that houses such a standardized contract. It will not reduce the need for OTC credits because those bespoke transactions will still go on. But how do we then promote that basic standardized contract so that, if we borrow the concept from the interest rate market, there is that basic curve, yield curve, for example, and then you add on the spreads associated with additionality, associated with quality, and so on and so forth. Then we can have that, trust in the market, that in market integrity, that what you're buying and you're buying at the right price, and I will be able to sell at the right price. So I think that there is a role for market regulators to think about it. But there are many, many issues associated with that needs to happen before market regulators can step up, including legal certainty around, what credit is.
Yes, well, actually, the legal nature of a carbon credit is worthy of a whole session in its own right, and maybe we'll have a chance to get onto that a little bit. So regulation could be helpful to promote quality, to promote price discovery, transparency, of course, secondary market, and all carbon credit derivative products that would otherwise fall under the securities in Hong Kong anyway, the SFO and equivalent securities regulations. Okay, let's leave it there because we're going to come back, I think, to regulation in a little while in the context of Hong Kong specifically. Let's move over, if we can, to Edward. Now, Edward, you're unique, and I'm sure you're unique for many reasons, but one of the reasons you're unique on this panel, because in a way, as a sort of representative of the corporate world, you're in a way a customer of the carbon market. It's carbon markets exist, in good part to serve companies like yours and other listed companies. So, from your perspective, and from the perspective of corporates generally, if you're able to share, why is the carbon market important to you and to your company?
Sure. Thank you, Ben. So why don't I talk a bit about how carbon credit is very important to New World, ESG, our journny, and also particularly our visions. Back in 2018, we have established our New World Sustainability Vision 2030. So we are committed to reduce our carbon emission intensity by 50%. And then afterwards, we become more robust and also more ambitious in our climate actions change. So in 2021, we have launched our renewable energy roadmap. So we target to achieve 100% renewable energy for our Greater Bay Area rental properties by fiscal year 2026. And then also we try to achieve 100% renewable energy for the whole China rental properties by 2031, so after 5 years. So with this ambitious roadmap, aside from business operation, for financial side, we also put this performance target into our green financing. So it was used as our SPT for our sustainability linked bond issued in 2021, which is the first at the time for real estate developer. So with this ambitious target, there's a penalty for SLB. If we fail to meet those targets, as I mentioned, then we need to have a 25 bips of penalty in the step-up coupon for the remaining life of the bonds. In Europe at that time, they try to reward back this 25 bips to the investor. But from our corporate perspective, I think the investor may not like this, given this is a so-called dirty money, right? You only get it by failing the targets. So we decide to just use the 25 bips, the increase to reward back to the environment, for example, purchase carbon offset, which is very well received by the investor at that time. A lot of global funds, normally they will put in order after we meet one-on-one. There's a particularly interesting that they put in order even before talking to us. The first thing he says is, I love your 25 bips mechanism. So there's quite some good discussions on the importance of carbon offsets. And recently, we are the Asia third real estate developer to obtain approval from science-based target initiatives on our near-term science-based targets. And also, we commit to a net zero SBTi standards. So with this offset, you can tell we are very keen to reduce our carbon emissions. But in reality, it's tough to do so. Technology advancement, and also, as Elaine said, I can't stop the cow, or at least not stop the cow fast enough. So we can't achieve that by 2026. The alternative way is to pursue through the carbon offsets purchase. Given we can encourage the carbon producer to do more this kind of good activities for the environment. So that's why you can see our business card or our logos, we also recreate. So newer culture is very try to try new things, learn from new things. So we are lucky to have the opportunity to participate in the first voluntary carbon tradings in Q4 last year through the Core Climate platform. So we have the first-hand experience of being a user and a buyer of the carbon credit. And thank you, Tracy and Standard Chartered, to source us a very high-quality carbon credit at reasonable price. I will not say high or low, but at least we managed to close a deal on a very efficient way. Thanks for that. So I think it's sort of a benchmark or a landmark for the sector. And a lot of corporates can call me, like a CFO, and call me and say, oh, why you purchase that? How you purchase that? So I think it's a good education for everyone. It's a good learning process for us. So with this backdrop, you can go back to your questions. Why we care about carbon offset? I think it's very important piece of financial instruments on our decarbonization journey. And as everyone knows, increasing demand for ESG, higher standard, no matter for all your stakeholders, right? Bondholders, equity holders, your board. So not only New World as a ESG pioneer, but also for a lot of corporates, I believe they need to increase their ESG standard, and carbon offset is definitely something very important tool for them to achieve that.
Great, thank you. Elaine, please.
Yeah, I was going to interject. After Edward has said all that, do you in the audience have questions around, exactly what did he buy, at what price, what makes it high quality? This is exactly what we're talking about, right? The transparency of information is hugely important, because I want to buy something that's even better, higher quality, but I don't want to pay so much. And how much is too much? Right. So these are important considerations. If you're thinking back, the transactions around carbon markets should greatly expand.
Exactly. I think that goes back to how Elaine was saying about the standardized contracts, where at least you have a baseline, and then you create and see liquidity and pricing as a baseline. And then you can have the deviation, that additionality of that higher quality. What additionality that project is generated? It could be including like generation of employment, increase of biodiversity of species in that forest, et cetera, to that spread, deviate from the base contract, but that development needs to be happens, and we need more corporates like the New World to really setting the standard, measuring, and go and participate in the market. And I'll stop here and come back to you.
So I might just go and get a glass of wine if that's all right.
Get one for me too.
No, that's terrific. And I think, we do need to shout out, Edward and New World. I mean, all of us who have been involved in green finance in Hong Kong, since, day one, have really relied on the sort of the corporate pioneers in Hong Kong. And certainly New World has always been one of those. So that's brilliant. And no surprise to see you at the Core the Core Climate launch, Edward. Let me just sort of pivot slightly, because perhaps it just ties up a bit of a loose end, because we all understand the important role of corporates and really the buyers in the carbon market. We understand the importance of smart regulation to the extent that can support a high quality and integrity within the market. Role of financial institutions within the carbon market. Tracy, what do you see as the sort of the primary roles of financial institutions? And we can focus on banks if that makes life easier.
Sure. And I also want to write on from the company, since Edward just finished. So from the company perspective, there's now over 1,800 companies that already have public commitment to go to net zero by 2050. And we expect the global demand for voluntary carbon market to multiply by 15 times by 2030 and 40 times by 2050. So this is a very significant growth that we're expecting in the market. So financial institutions has an important role, their usual traditional role of facilitating the growing carbon financing demands, acting as an intermediate to finance company across their value chain. And also provide risk management tool via hedging products, using our clients' network or peer-to-peers, like the marketplace amongst banks, financial institutions to create, to match supply and demands from our client base, and also develop innovative products and collaborations to channel capital to an investment to early stage technology capital to where capital normally not to get to. So as Standard Chartered, we are, of course, I have to do the plug, at the forefront of running a number of initiatives, including being the advisory and board member at the ICVCM Integrity Council member, and together with Dr. Marjun and other experts. This is where ICVCM to aspire to drive standard, that transparency from the supply side, from the project generations. Also, of course, we're working with a number of exchange across the globe to develop their carbon market. And we have experts for serving our client in both compliance and the voluntary carbon market with a range of products from spot to forward swap and option to facilitate our clients' decarbonization journey. So with this, let me stop here and pass it back to you.
Okay, well, I'm just going to throw another question out there. And it's actually, I did receive the first question. Thank you very much. Actually, I don't know where it came from. Thank you very much. Which relates to, Edward, your comments. The question was actually asking whether New World bought the carbon credits to offset as an investor. But you answered that already. But
I add a bit more,
But let me just let me just ask the question, and I'll direct it to you first, if I may. Does the carbon market, is the primary sort of function of the carbon market to serve buyers who wish to offset or buyers who wish to invest?
That's a very good question. Actually, one story that I want to share is I asked my ESG team exactly the same question. What is the purpose of carbon offset? And then go back to Elaine and Tracy comments. Actually, we need to have a standardized contract and also more well-defined usage, I think, of the carbon offset. Because the reason is actually carbon offset, I can use it for my SLB, but I know that, for example, SBTI doesn't accept carbon offset in the standard. So without the ESG expertise, like a pure finance guy, at the beginning, I don't know whether or what's the value of this carbon offset or which exact purpose that I can do. But with, as Elaine and Tracy comments, if there's more standardized contracts, so I know first the type of carbon, because every time carbon offset is very general, right? Different type of carbon, different purpose. The type, what's the use that can be offset or help on the decarbonization journey, it will be super helpful. But I think it is a very early stage. So For me right now, it's more like for the ESG journey instead of investments, because this type of carbon credit, personally, I think really have a huge upside. But for now, there's so much unclear definitions, or a lot of room for regulations, or at least regulate the market integrity. I think there's a lot of volatility. So as a corporate treasurer, I will not do it for investment purpose, given the risk and the volatility. And last comment, I was an ex-banker and ex-trader before a CFO. So when I talked to Tracy before we exactly trade, if Tracy, she's very diligent, and give us a lot of proposals, what type of credit. Of course, my ESG team have a lot of comments. And then when we pick someone, and then you trade with London and say, sorry, Edward, it's sold. And then second point, sorry, Edward, it's lifted. So there's so much, illiquidity, given the shortage of the carbon credit. But there's only a more increase in demand, right? But I believe because it's the first trade, that's exactly why we need to do the first one. Remind me the back old times in early 2000, that when equity derivative market developed, over the counter, equity swap, the bid-ask is so wide. There's so much little liquidity. That's the key players who establish the market. But once the technology perform, more liquidity, banks earn money, but at the same time, buyer and seller can cross easily.
Let me jump in on that, if I may, because we all hear so much about the demand, the sort of surge in demand that we should be expecting, particularly we're talking about the voluntary market side, of course. I think the last Bloomberg estimate that I saw was sort of $500-600 billion market by 2030, 40, 50, something or another. Yet, isn't the reality when you look around the region, and of course, core climate is still very, very new, but there are a number of marketplaces around the region that people may be familiar with, all developing, quite novel approaches and interesting products. But from my understanding, they all the common theme is that there's a sort of an absolute lack of liquidity. And so we're told that there's so much demand. Supply is an entirely different issue or challenge. But when does everyone think that we're really going to kind of feel that tsunami of demand? Because we keep being told that it's coming, but where is it?
I think there's a number of things being cooking that I expect to come out very soon to really drive that transparency and integrity where the investors or buyers are looking for. So from actually jumping into, I don't know what questions you want to ask me, but I'm going to jump to that. So from the standard. From the standard side, so from the project generation that I mentioned, so ICVCM I mentioned, they are already closed the consultation on CCP called Carbon Principle, which is an international standard that we want to have that baseline of standard on project to setting. And that, I think there's 5,000 something comments that they're going through right now, but we're hoping to see something coming out this year. And then from the company side, so from the buy side, the usage, what is the right way of usage and how do I use offset, not offset? So there is actually the code of practice from VCMI, another acronym, so another associations where they're already putting out on how companies should be using this correctly to make sure that you are using that for the right way, in a way. So coming back very quickly for the SBTI as well. So they realize that, actually they do allow acceptance of the last 10% offset for your residual. But the problem right now is the timing of recognizing that, because if everyone wait until 2050 to do the last 10% offset and invest that money into carbon credit is too late. We won't be here then. So I think it's that timing, and they are coming out with a paper. I'm hoping first half of this year soon to really encourage company or recognizing leading company in this front with this effort as well.
Okay, so the Integrity Council is focusing on sort of the standards on the supply side. The VCMI is on the buy side. Okay, but in your mind, it's the need for internationally sort of accepted standards that will sort of drive the surge Do you both concur?
Yeah. So I think there needs to be more agreement and transparency around how companies are using offsets. There is work by the VCMI, and then there is also work that's happening around with the corporate disclosures on the corporate disclosure side. So in Europe with the ESRS, there will be disclosures about how corporates are, well, they're not allowed to actually use offsets in that sense. But in the ISSB, for example, they will require companies to be much more transparent about how they are using offsets, describing, the type of activities, how much of it is being used, and whether or not it's actually reducing the operational emissions. So more transparency about that will help to drive the demand. I think that will ultimately come. But there is also that issue with timing, as Tracy had mentioned. I mean, if you have spare cash and you know that pricing is going to go up, I'm just going to buy it and bank it, and then, this results in the current situation where there could be a surplus of credits in that have been issued but not retired. And then there are not enough, free credits that are being traded in the market because everybody is just buying and holding. So that creates another problem.
Edward, did you have any sort of final remarks?
I agree. Because as a corporate treasurer, right, I have the choice to pick the credit that I need, which fit my corporate strategies, ESG vision. For example, I focus on decarbonization, then I should pick those type of credit related to that. So as you said, if you're more clear defined, if internationally accepted, then I have the certainty that it will be accepted for my future KPI testing or fulfill my ESG goal. I will have more convictions and allocate more capital to buy this credit. And second thing is, as you said, as I also mentioned before, the price volatility, because as you talk about price discovery, once you have more international standard and a better infrastructure for sure at that time, then there will be more certainty on the intrinsic value of the credit, because there's so different type of credit, just like stock and bond picking, right? Okay. Then you pick the right one. Then there will be increase in demand.
Great, thank you. Well, you heard it, everyone. So let's switch gears slightly and much closer to home. We've been speculating and advocating for some years now in Hong Kong in respect of the development and growth of Hong Kong's carbon market. Notwithstanding, with the exception of the occasional report and feasibility study or indeed OTC trade, then nothing much seemed to be happening. And then, of course, towards the end of last year, we had the announcement of the launch of the HKX's core climate platform and a number of associated trades to accompany the launch. So, starting with Tracy, if I may, does this mean we now have a voluntary market or a carbon market in Hong Kong? Are we sorted now? Can we all go home and think about and worry about something else?
Perfect timing with these questions on Dr. Ma walking into the room. So Hong Kong has gone a long way in developing the carbon market. And I still remember a company, Dr. Ma, proposing Hong Kong should develop a carbon market idea to policymaker a few years back. And that was pre-COVID. So you can see quite a few years ago. And so from very early stage on setting up a expert group on a Greater Bay Area carbon market working group led by HKGFA, to seeing the cross-agency steering group having the green and sustainable finance strategy planned, including carbon market development back in 2020. And then from SFC, publishing the carbon market opportunity feasibility study early last year, and to late last year when the policy address in Hong Kong have the blueprint to develop and build the international carbon market from the Hong Kong government, and to the latest, which we heard a few times now, the birth of the Hong Kong EX Core Climate last November, which is a international voluntary carbon marketplace where the first batch with over 20 organizations participate. So that is where we are in Hong Kong right now. But then as with the rest of the world this is still a very early stage game. So there's still so much to be done to create the depth, liquidity of the market, the transparency needed, required, that supervision development, et cetera, et cetera, et cetera. So I would say the baby is born, but now we need to bring this up in Hong Kong and the region.
We need to feed it.
Yeah.
Okay. Thank you. Elaine, I mean, in carbon markets, like many other markets in Hong Kong, we see this tremendous opportunity for Hong Kong in support of mainland ambitions. And so, how can Hong Kong support the development of mainland China's carbon market? I mean, for example, we hear a lot about Hong Kong somehow joining a GBA ETS compliance market. We also hear about Hong Kong developing a sort of carbon connect mechanism, which I suspect means slightly different things to different people, depending on context. How real, in your view, are these initiatives, and what's your expectation of timeline? How do we deliver on some of these more, frankly, interesting initiatives?
Yeah, this is a good question. And when you proposed it in our discussion, I was going to no, we're not going to talk about that. Yeah, but coming back, I just want to make one point that the feasibility study that we published early last year is by the cross-agency steering group. So it was in conjunction, not just the SFC. We can't take all the credit to that. So I think Hong Kong has a very unique role particularly in supporting the climate ambitions of mainland China. I mean, it is the world's largest emitter and there is a huge amount that it can do, and it has already publicly stated its ambition. Her ambition. So we all need to get cracking on it. The ETS market in China is up and running. The VCM pilot schemes have been running for a while now. And then the question is, how does Hong Kong support the development and the healthy growth of this market? The main question here is, because as I mentioned earlier when I spoke earlier, that the ETS, the compliance market, is actually doesn't have the financial regulators playing a role in oversight. It is actually the environmental regulators. So in that sense, in order for Hong Kong to then connect with the Chinese compliance market, it is a decision that will have to be taken at the policy level, not at the financial regulators level. So we can push as much as we want, but structurally it's just not designed in that way. So there needs to be a comprehensive, cohesive proposal by Hong Kong to connect to the Chinese market, and then it can be evaluated in that sense. And then financial regulators can play a role in the fairness, the efficiency, and the execution of transactions. So I think that's a key. I think a key thing that we have to overcome, and I think that goes straight to a lot of the nuts and bolts as well. So what is the legal definition of allowances and credits, both in Hong Kong and the mainland? How do we overcome that? How do we connect that? Connecting policies, and then after that, connecting markets. So several pieces have to be in place. I think the appetite for the financial sector, I think we've heard a lot about that. I think everybody's asked us about it. It's not that we're not doing anything, but there stands in place certain things that have to be put in place before it can happen.
Okay, thank you. I don't know if I'm allowed to interrupt Dr. Ma. Dr. Ma, did you have any remarks that you want to make in respect of just these very specific points about the GBA ETS sort of potential, and also the Carbon Connect sort of concept that we hear talked about from time to time? If you'd rather not, then that's fine as well.
No, maybe after you guys finish, I will give a speech on that.
Oh, very good, very good. It's a bonus, people. Your free drinks and a speech. Okay. So we So we've talked about the sort of the current status of the carbon market in Hong Kong, and I think we can probably all agree that we are sort of at step one, a very early stage. Core climate is, it's something that we can all rally behind, but a robust carbon market is a lot more than what we currently have, and so we'll all be looking and watching with great interest to see how that evolves, and of course how other sort of carbon market participants sort of join and add their skills and innovations to the growth of the carbon market in Hong Kong, which perhaps just leads me on to another topic. We talked a little bit about what we need to sort of spur demand for carbon credits in the voluntary market. We accept that we're very much at step one in terms of the development of our carbon market in Hong Kong. What other things can we sort of suggest? What other things do we need to really scale up the carbon market in Hong Kong? I've forgotten which order we're in. So whoever wants to speak first. Tracy, do you want to go?
That will be an easy one. Can you imagine? I come last and, but I think we said a lot on standard from buy side, sell side, right? So for projects from the sell side, the project generations of credit, that the standard need to be in place. And so we're looking to ICVCM on the CCP, and also how does that plug into Asia, to Hong Kong, to China as well, very important. And on the sell side also mentions about the VCMI on the how does corporate use as a part of the code of practice, and also SBTI and the paper that coming out on recognizing how the early stage of investing and into the carbon credit need to be recognized from the company to give that business reasons for their own decarbonization journey. So from that, so we kind of mentioned that. But one thing I really want to see is linkage. Mm-hmm. So we want liquidity, we want the depth, we want the big pool of players to be in the game. So for that linkage is very important. I see within ETS market, so ETS market linked to ETS market, compliance market linked to voluntary carbon market, and exchanges can be linked to carbon exchange, can be linked to carbon exchanges as well, to really deepen that market liquidity, fungibility, and allow market pricing to be more transparent and efficient.
So again, our friend quality and standards and interoperability. Elaine, would you add anything to the list of how we effectively scale up our carbon market in Hong Kong?
I think a lot of those are, the hardware. What we also need is a lot of skills, technical expertise. I think we need to build the ecosystem that, supports that credible market. You can have all of the standards and rules and everything, but ultimately, investors will have to trust the information that is out there. So we need the ability to report accurately, efficiently, real time if possible, on environmental impact of credits, so that corporates can reliably use that information for their own reporting, because with the sustainability reporting that's going to come, that is going to put the burden on the companies to be able to articulate exactly what they're doing. So I think that ecosystem, that capacity building, that awareness needs to be built up, and that will take time. So we better start working on that.
Okay, Edward,
I think basically a lot of important points get covered. I think two more things are verifications, similar to what you said. Instead of standard, we need a lot of third party, no matter independent assessor, to define again and also verify those credits are authentic, or at least can be used in what type of purpose under the framework. If there's a national standard, that's good. If not, at least for a particular endorsement or index that can be used. So verification is important, because there's a lot of different type of carbon credit involved, I'm sure, in the next futures. For the scale up, I believe from the corporate side will be just naturally increasing, given the higher ESG standard, as I mentioned. So I don't worry about that. It just encourage them to use right now instead of, as you said, close to 2050, because I know the price will be stable at that time. I don't need to spend the cash right now. That's the opportunity cost. But if we can have education to that first, how important to have every stakeholder to come in the game, because as you said, if you only have one particular Demand side doesn't work, supply side doesn't work. We need everyone, regulators, demand, supply, the independent assessor. And once we participate, how we can improve the market in terms of liquidity, in terms of the pricing discovery, then people will kind of contribute a bit. Once the market become more mature, naturally, people will just participate. They smell the green in the market, but like a GFA, they smell the finance side, there's money as well. Because like banks can make money, buyer can sometimes as an investment, corporate can use it as a hedge. If I know the price or at least the intrinsic value, like the use of that carbon credit in our ESG journey or our visions. So I think if in order to scale up, just very important to have the verification and also education. That because some of the CFO may not spend as much time to understand the ESG space, but if it's more education by the regulator, by the verifier, by the bank saying that this work, the price will be like this, like this, like this, then I think there will be more confidence for the buyer to buy more.
Okay, thank you. I mean, I want to turn the microphones over to the audience here in Hong Kong. We've heard from our speakers their thoughts on what's needed to scale up the carbon market in Hong Kong. Does anyone have anything else they want to sort of add to the mix? I would add smart regulation, please.
Thank you. Thank you so much for the lovely introduction to the carbon markets. My question is, I wonder if you might have a view on, I guess the elephant in the room that we haven't discussed is how much should carbon, a ton of CO2 emission costs in order for us to truly start taking a notice, right? So we're talking about corporations trying to reduce, we're trying to develop transparent markets, but ultimately, I feel like, we're still acting slow, right? We're still really behind the curve. And in the financial world that I work with a lot, the questions that we being asked a lot is, and actually, quite frankly, it goes back to how initially the compliance market in the European Union has failed because they emitted too many certificates, right? So there was oversupply of certificates and the price was not high enough. So, we are 2023, 20 years have passed, more than 20 years have passed since the carbon markets have been developed in EU. We haven't really moved the needle on reduction of CO2, right? So do you have a view of where do you think the price should be? Is it $600 per ton? You're smiling, Tracy, but where is it that we should be then starting to move faster? Because this is ultimately what's needed, right? I mean, it's nice that we can make money on that on the back of it, but for real world to start moving on quicker, we're going to need to make either better, faster penalties or better incentives.
Okay. I mean, I think there's two parts to that. It's what's the magic number? What should the price be to have a meaningful impact? And how do we get there? I mean, through price transparency and currently, of course, the absence of a reliable carbon price just about everywhere. Who wants to tackle which bit? I can see you grabbing your microphone. Yeah.
So I would definitely have a step, but like for the audience, Ben's questions asking you to make a statement, not a question, that just to clarify. But coming back to that, so the current price in the voluntary carbon market is between $2 to $25. The most liquid is between, I think, $12 to $16 are the most liquid. I do not have a magic one, but like I mentioned, all the ingredients need to be there to develop that fungibility, that depth of the market, that liquidity. So all the work needs to be done. The standard on both sides and the regulation supervisions that need to be in place in order to create that one price that you are looking for and that standardized contract and everything. So that is the work that all of us collectively need to be working on to go into that stage. But the expectation is, like I mentioned earlier, we expect the voluntary carbon market to grow 15 times by 2030 and 40 times by 2050. So this is the growth and expectation and demand that we're seeing. But then for the pricing, this is the current situation. It's also why the market is so fragmented, because of we are not quite there yet. So
we don't have a coherent answer for you, I'm afraid. But if there was one, we would be probably in a very different position than we are, still trying to build carbon markets in this part of the world from the ground floor up. Yes, is that Tassos? Hey, please.
Hello. Hi. Oh, Ben, I got a mic.
We need a. Let's go for the mic first. Oh, I beg your pardon. Excuse me.
Am I allowed, Ben?
sure, good.
Right. Hi. Thank you for the sharing. I'm Sammy Leung from PwC. I think along the line we spoke about is a nascent market, and finally we have core climate in Hong Kong. And then I get a sense that we all agree huge opportunities. Tracy, you mentioned the growth. And then Elaine, you mentioned to actually accelerate or upscale, there needs to be input from, say, environmental bureau and others. My anxiety and my personal level is this is like a once in a lifetime opportunity for Hong Kong as the financial hub doing all that. Are we moving quick enough? Not asking the questions, and attacking or criticizing any one of you. And I have a lot of respect to all the petitioners. And even though looking broader, the Integrity Council that they are proposing, the enhancement, my personal feeling is still quite unfriendly for investor or CFO, treasurer. Reading through those project paper, lengthy reports, are we really getting the comfort that we need to conclude, oh, this is a high quality credits that I'm willing to pay that amount of money? So I have question marks, and I think we all want to contribute and help, but then because it involves so many parties and these are early days, so what could we propose to the government so that Hong Kong could actually move quicker is something that I want to collectively get some views. Thank you.
Sure. Elaine, did you want to have a go at that?
I'll be careful. I think the unique structure of government in Hong Kong is good and bad. I mean, if you simply just superficially compare it to how Singapore is run, Singapore has a very top-down, cohesive, well thought out policy and strategic direction with regards to sustainable finance and with regards to carbon. Their house is completely, from the outside, it looks completely in order. Whereas in Hong Kong, each component, is run by a different regulator, run by a different government division, and they all don't necessarily work completely well with one another, right? So I think the ask should be that Hong Kong needs to do some soul searching on what role it can play in this need for decarbonization, particularly of its unique positioning and connecting role to China. I mean, I cannot emphasize how important it is that mainland China is able to successfully decarbonize, because otherwise we are basically all cooked, regardless of how well it's being done in the US, in Europe, or in Singapore, which basically makes no difference, to be honest. But if the mainland doesn't decarbonize, we are not going to be successful.
So I mean, Sammy, if I may share my thoughts as well. I mean, I think I generally concur. I mean, I think like all things in green finance, in order to, if we leave the development of carbon market to the sort of private sector and private interests, then we'll get there eventually, but it's far too long. We'll be cooked and baked long before then. And so, we do need that concerted effort, and that collaboration on the sort of public sector side and the private sector side. And I think, within the context of Hong Kong specifically, we think actually the opportunity is there, the market opportunity, the sort of the the business opportunity, the infrastructure. We all need to scale up, but we're pretty good at this stuff and learning, and we're very adaptable in this town, as everybody knows. What we need probably is some sort of someone needs to take responsibility for carbon markets. And my personal view is that it's not fair to ask the exchange to do it all. That they have a huge role to play, and they can add tremendous amount of sort of acceleration to the process, because it's the exchange and their heft and reputation and everything that they stand for. But it's unfair to leave everything to the exchange just simply because their interests may not be exactly aligned with. They've got to look after their own interests as well. And a robust carbon market is many things to many people. So what I would like to see would be and I think it's within government somewhere, a person or a body, someone needs to take ultimate responsibility and actually design and have a clear framework of what it is that we want to put in place. If it grows sort of organically, it'll just take too long. So
I just
that's my view.
Add that various sectors within Hong Kong are ready, right? We have lined up the ducks. Basically financial regulators have come up and say we stand ready. When we are ready to go, we'll look into it and we will be able to take action. We know we've examined what next steps might be needed. So once we have that green light, and then we're good to go.
Yeah, I think Hong Kong, the beauty of Hong Kong is already we are very flexible, no matter which part of stakeholder you are. So like green financing, look at 10 years ago, it's not even there, right? And then government launched a green bond, corporate like us, SLB, green loans. So it kind of really start to develop. So I think similar to carbon credit, but the difference is green financing, there's already different type of certifications. So once we clear this up, I think a lot of buyers or the seller will naturally participate. So I think it's just a matter of time. And I think if we are all serious about it, it's never too late. If hopefully in the next 2 years, there will be more topics that we get cleared, as you mentioned. And then I believe actually Hong Kong will have a major role in the carbon trading.
And for anyone who wants to participate and doesn't know how, go and buy some carbon credits and post your the price that you paid. Okay, I'm being flashed at, but was there one more? Do we have time for one more question? I feel committed to Tassos.
That's okay, don't worry. So thank you, that's very helpful. And I will try and make statements and not questions, okay? I think, first of all, I will build a little bit on the point that Elaine was mentioning, right? I think the difference between Singapore and if we want to scale demand, there needs to be some more view around the carbon price, but not about voluntary carbon markets. It's just a carbon price that will drive decarbonization in the real economy. Voluntary carbon markets will just play a small role in that. And I'm not, to be honest, much fussed about speed. I'm actually encouraged that we've got something now. Okay, 2 years, CIX was launched 2 years ago. Indonesia and Malaysia are launching something now. So 2 years is nothing versus what we have ahead of us, which is another 20, 30 years, right? So the more important thing is that we've got something. Now, I would like to see some more understanding around if we want to drive demand, right? Edward, like if you had to pay carbon tax and you could pay some of your carbon tax with some of the carbon credits, then I would immediately have some kind of regulatory floor that will give me confidence, right? Exactly how Singapore is thinking about doing that 5% that they're thinking of. But in order for them to get to that 5%, they first had the carbon tax and they had a view of what carbon price might look like. Now, to the question around 600 euros, we just need to recognize, right? We're talking about different things. What are you trying to achieve? 600 euros is if you want to remove a carbon credit from the atmosphere. Technologies don't exist, and that's why it costs 600. It's about scaling up the technology that will allow us to remove what's out there. Now, if we're talking about avoidance, though, that's where what we're talking about, and how do you achieve avoidance? Well, what are you trying to incentivize the European Union? I don't actually think European Union is a failure. Everyone can have different views. There's a lot of lessons learned. They have done quite a lot over the last 20 years. Could they have done it faster? I don't necessarily find that a useful conversation. They are moving quite at the speed that they want to move. And they've actually moved more than others, right? Everyone is trying to chase right now. So if I'm looking at avoidance, then what we need to look at is it depends on the country. It depends on the technologies that they have available. It depends on the deep pockets of any corporate. So how much do they want to spend in order to decarbonize their own operations? And every company, every country will have a little bit of a different abatement cost curve. And that's why there cannot be one necessarily, there needs to be a global carbon framework, but there cannot necessarily be one global carbon price, because every country and every corporate operating within that country will have different technologies available to them at a point in time in order to drive their own decarbonizations.
That's us. Thank you. I'm going to jump in there because we're out of time. I'm going to suggest that we continue the discussion in the bar. My parting question to the panelists was going to be what your New Year's resolutions were, but as we're out of time, I'm just going to hope none of you have given up wine, because it's all being laid out at the back. And so let me just thank you all very much, Edward, Elaine, Tracy. It's been a fantastic discussion. I'm sure everyone's learned a lot today. I know I have. So perhaps we can first give our panelists a round of applause. Thank you. And let me hand over to Dr. Ma for closing remarks and final comments. Thank you.
So maybe you can sit with me. Okay. Otherwise, I feel lonely. I just want to respond to Ben's question and also some of the topics inspired by the conversation. Now, as Tracy said, I've been advocating a couple of ideas on carbon markets in Hong Kong in the past couple of years. Now, let me take this opportunity to report to you the status quo of these ideas moving into action. The first idea I raised was a unified carbon market for GBA. At that time, I was thinking about, Guangdong have a fairly sizable carbon market hosted by Guangzhou. It's called Guangzhou Carbon Exchange, Guangtanso. And in fact, that's the most liquid regional market in China. And Hong Kong, I suppose, needs some sort of ETS-like mechanism to incentivize local decarbonization, for example, buildings and transportation and so on. But Hong Kong itself is too little in terms of generating liquidity for the standalone market. That's why integrating this part of the Hong Kong participants into the Guangdong market, and let's call it a GBA market, would make sense. And there's some conversation in the past couple of years on whether this GBA market would involve Guangdong, Shenzhen, Hong Kong, Macau, 4 jurisdictions, or just Guangdong and Hong Kong. There's a lot of complication of that. If you involve 4 parties, it takes ages. And even within Guangdong, there are 2 markets. One is the Guangdong market, which is hosted by Guangzhou, and the other one is Shenzhen market. That's on Shenzhen only. So I think partly because of this complication of coordination between different jurisdictions, this idea didn't really fly at this moment. But I don't rule it out as a possibility. The specific design we had back a couple of years ago on this was integrating the Hong Kong major emitters, for example, the power companies and some transportation companies, and maybe selected building owners into the GBA market on an opt-in approach basis. Namely, you guys can come in on a voluntary basis, and we can design the rules in such a way that they are willing to come in because they actually make money by joining into this unified GBA market. I think the idea is still open, and when time is appropriate, the coordination conditions are ripe, I think we can consider that implementation in the future. The second idea was the Carbon Connect, and that's a very simple one because we all know the Stock Connect and Bond Connect, which opens the Chinese market to international investors. And so based on that sort of analogy, I said, let's build a connect to some of the Chinese carbon markets, maybe initially from Guangdong, because Guangdong is the most liquid regional market. And eventually we can move towards a national market, national ETS, which will be the more liquid market in the future. But things are slow, partly because Guangdong market itself, despite the fact that it's the most liquid, it's not very liquid. And if you want to trade in a sizable volume for foreign investors in a meaningful way, you need a bigger liquidity in Guangdong. That's a current constraint. And the next constraint, the Chinese ETS market has not opened yet, even to domestic investors, not to mention international investors. So that idea is still there, but it's probably not appropriate for immediate implementation.
Can I just ask, I'll just ask you, do we have any indication of when the China ETS market might be open to investors?
It's been proposed for a long time, right? Especially by the finance guys, including myself. But let's see how it's going to be regulated in the future, because we are moving into a new government in March next year, and not sure whether the regulatory structure of the Chinese ETS is going to change. In case the new regulator has more sort of finance elements in it, I think it's going to be easier. Otherwise, we'll continue to require a lot of work from external push. Now, the third idea is exactly what we're discussing today. That's a voluntary carbon market. And now it's starting, right? I'm glad to see that Core Climate has been launched and initial trading is good. But I think we need to create an ecosystem rather than just a one supermarket for some, foreign products, like VCS, being traded here. Of course, it's a good initial step, but we need to have an ecosystem that's involving a lot more supply and demand for the Hong Kong voluntary carbon market. I think broadly two things to do. One is that developing a set of eligibility criteria for selecting the carbon credits that's developed under existing programs globally, whether it's VCS or gold, and whether there are some of the Asian voluntary carbon market mechanisms. I think there are many of these, 5 or 6, from Japan, from Vietnam, from Indonesia. Some of these should be qualified for trading in Hong Kong rather than just one product. So we need to develop a eligibility criteria to allow these to come with high quality, with good transparency, and thereby we're increasing the potential supply. Of course, with more supply, I think there'll be more demand coming in. The next step is going to involve some development of Hong Kong's own voluntary carbon credit mechanism, which is what I call something like a VCS and something like gold. But it's Hong Kong's own crediting program. And now for this, it's going to be even more complicated because we need the standards that's setting standards on additionality, on transparency, on no double counting, on many other things. And we need to generate a lot of demand for this kind of a new product and generate a lot of supply for this kind of new product, and have VVB there, and have a lot of brokerage. And have liquidity created maybe by money market making mechanisms. Now, the most important one is I think creating demand. I do hear recently that the supply is there, but not enough demand, right? How do we create demand? I was just thinking about 5 ideas. Number 1, ISSB. You all know ISSB, right? International Sustainability Standard Board. Which is being developed, and I think will be adopted by many jurisdictions, including Hong Kong, not very distant future. And ISSB itself can become a very powerful drive for demand for carbon credit. If the major corporates, especially listed ones, and those issuing bonds, are required to report their carbon emission status and required to report even their pathways towards net zero. Then I think the demand for reducing the carbon emission, including using carbon credit, is going to rise. And so properly use this ISSB design in the local fashion to create demand, I think is very important. That's why it will require coordination between different parts of the government. If carbon market is run by this body and ISSB Hong Kong version is run by the other body, they have to talk to each other. Rather than working in silo. The second thing is about generating more net zero commitments. by companies. If all major companies in Hong Kong make a statement saying that I'm going to be net zero 2050, and I have a pathway toward that, every year I have to reduce carbon by 3%. I can only use my own efforts to reduce 2%, and the other 1% has to come from the carbon credit market. That's a lot of demand. So who's going to generate that? I think the government has to do that. For example, starting with government-owned companies like airport, right? Maybe MTR, and maybe the power companies, and ask them to make net zero commitment so that they can take a lead in generating demand for carbon credit from Hong Kong. The third thing, the much wild idea, is to convince the Chinese authority to allow the part of the Chinese carbon emission in the ETS market to be offset by the Hong Kong carbon credits. Whether it's 2% or 3%, we can negotiate. But the 5% of that can be offset by CCER. That's why CCER will be alive. Otherwise, the CCER cannot develop. So we have to think about that, how to convince the Chinese authority to work with Hong Kong as one, effort to develop the Hong Kong voluntary carbon market. And the last idea is to have the green projects, especially those invested by Chinese in the Belt and Road countries, to generate carbon credit and sell them in the Hong Kong voluntary carbon market. Now that connection is possible because I think China actually see a lot of a need for incentivizing more green investments. And we need to create this kind of incentive, which is voluntary carbon market for the investments in the Belt and Road country for decarbonization. So this is an ecosystem, ISSB, net zero commitment, Chinese ETS, Belt and Road green investments, they all need to be integrated in the design of the Hong Kong voluntary carbon market in order to spur demand, as you said, and potential supply. Otherwise, I think we'll be running a zero-sum game because the current market is so small. You compete with a larger share of a very small market with Singapore, with a lot of other private sector operators.
Can I just ask Dr. Ma, you mentioned CCERs, and I'm sure a lot of ears pricked up at the mention of CCERs. Do we have, is there a sort of timeline or expectation as to when the ministry, the MEE will sort of restart the CCER sort of creation process, and what the framework around that might be? And to the extent that there isn't a framework, maybe that's where Hong Kong's standards framework that you mentioned could come into play. But we're all waiting for a CCER sort of printing press to recommence.
Yeah, no, I work with Beijing Green Exchange so closely because the CEO of the Green Exchange is the Secretary General of Beijing Green Finance Association, and I'm the president. So we're very close, talk about that every couple of weeks. And he keep telling us, that it's going to be very soon, right? But I think this message is becoming increasingly more credible as a lot of readiness within the ministry, within the technical preparation group of the Green Exchange, and also with a lot of pressures, building up. I think pressure is important, including Hong Kong. And we are actually building pressures now for the Hong Kong government, including for Elaine, to, organize different parts of the government to take a stronger action. So let me just conclude by answering your question, what really needs to be done, right, by the Hong Kong government on pushing this idea of voluntary carbon market. I think we need a cross-agency group for voluntary carbon market. It cannot be done by a single unit of the government, whether it's stock exchange, whether it's SFC, whether it's Environmental Bureau, whether it's Port Chain. It involves so many things. My personal experience in 2015-16, when I was chief economist in PBOC, was to involve 7 ministries to develop the green finance policy framework rather than any single one. I think the same need to be adopted in Hong Kong to be effective.
Thank you very much.
Thank you, Ben. Can you announce the opening of the
So the bar is officially open. Thank you very much. Round of applause for Dr. Ma.
Thank you.